Good morning, everyone, and welcome to the European crossover webinar. I was just pulling up right now for the bunds for FX low. Hang on a moment. He was just asking about the bunds. We can see right now we're 64.56. Let's go on and hang on one second. Obviously, welcome to ECB day, and we did see a good little dip here in the euro. Actually came in right into our support. Actually, I posted, as I was mentioning, I'm posting charts, 2 to 3 charts, generally about 3 charts in the Asian session. So you can see those on the basic technical. We'll quickly move into there. Right here for the euro. Euro's in the early phase of gathering upside momentum as we go into ECB. Initial upside target will be 1460. That's as we come out of the ECB, confluencing with 1452, the 50% of 1336 to 1569, with downside support at 1340. Well, today the low was just that, 1340. So we've taken a quick little dip here in the euro slide, and we do have ECB day today. Take a jump here, looking at that same euro chart. This is what I was referencing as we get past ECB. If we are to see this euro garner a little bit of momentum. There we go. And we've seen a little bit of a divergence here. You can see here, and this I was referencing here, starting to gather some momentum. Obviously, a quick little dip here. There was a story late yesterday. We'll take a look at it. They're saying the ECB is expected to acknowledge lower growth. I don't see how they can't. But this will be, I think, this will be the key area for them to jump up. It's going to be 1460, confluencing here with the 1452. If we can get past this area, obviously we've taken this dip, but a lot of people are looking to buy the euro. Thinking the dollar's gone as far as it can go, and we'll take a quick overview to that. Once again, back to our basic technical and the analysis posted in the European session. We'll take a look here on the cash dollar index. So it says, is the dollar on the precipice of a pullback on the eve of the ECB with the euro holding its own despite poor economic data across the region? The dollar may be in store for an ease. The pivot is 96.08. Now we've been talking about that, which has been the bias chart support for the last few days. Upside resistance is the 96.51 with downside support at 96.36. And we're looking at the 2-hour on that. Let's quickly move into the cash dollar index. And you can see here, I've updated this to recognize, and this has been this. We've been talking about this for days. How this, even beyond that, seems like about a week and a half. This 96.08, even when it was defending the 95.65 successfully, we talked about the 96.08, and not to go and keep this too low, because if we would have seen it right here, we've been looking at 33. But if on a good ECB pullback, well, we're already seeing that before we even get to the ECB, is right here at this 96.50-ish area here. It comes in right there at 50, well, 52. I think we've been using that 96.51 as our upside on a push if the euro pushes lower, but we're lowering it down here, right down here, 95.36, right there. If we were to go in and break, if we do start to go and see this ease here on the dollar finally, but we'll see how that plays out. We'll take a look here with the cable. Cable's still keeping its own here. We did push. I know Blake was looking for potentially a move to 131 and almost just about doggone made it before we started to edge back. And as I mentioned, we had started out in the beginning of the week. It was in a buy mode. We're looking for it to be a buy on a pullback. Although the week started out where it certainly looked, when you looked at it, that there would be a bit of an ease in here when we had referenced that long-legged doji. Right here, remember, to start out the week. So he said, you're going to see this thing ease back a bit. Thought it would have eased back a little bit more, but that when we did our analysis, it would be a buy on pullbacks, although I would have expected it to pull a little bit more. Once again, long-legged doji, bulls don't have control, bears don't have control. What's the most previous point of direction? Well, it's been a pretty good rally up, so you would have expected to ease back. It did start the week out early on the defensive, but it didn't pull back much, and from there we've been working higher. Let's move this back to the daily. So we'll get on with the morning bid and move into the analysis. The European Central Bank is sticking to its official guidance that it will raise interest rates by the end of the year. But the focus on today's announcement will be how explicitly it acknowledges a slowdown in Eurozone growth. Germany, France, and Italy, the Eurozone's biggest economies, barely grew in the fourth quarter, and ECB President Mario Draghi has already acknowledged that the slowdown could be longer than expected. Some believe the bank's next move at some point may be a further easing. Yet with much of the firepower depleted by the quantitative easing and super low rates, Draghi expects to use his remaining tools sparingly over the coming months. Expect Thursday's meeting to be more words than action. Greece's parliament will also vote today to ratify an accord to rename its neighbor, the Republic of North Macedonia. The deal aimed at settling a 28-year-old dispute between the two countries over the use of Macedonia triggered strong opposition among many Greeks, angered at what they see as an attempt by their neighbors to appropriate Greek identity. Assuming Prime Minister Alexis Tsipras can bank on the support he mustered to survive last week's conference vote, the accord should pass, yet issue could still damage him. An opinion poll conducted for the newspaper Protothema on January 20th showed 66% in agreement. Well, let's quickly move on to the markets. Sterling has been the standout on the world markets over the past 24 hours, clocking up gains of almost 1.5% against the dollar and euro this week as the UK's opposition Labour Party seeks to back a parliamentary move to rule out the no-deal Brexit and possibly postpone the withdrawal to the end of the year. Helped by surprisingly strong UK jobs and wage numbers. Well, that's a change compared to what you're seeing in the Eurozone. Numbers this month, sterling hits its highest since November the 7th against the dollar overnight, and its highest since November 14th against the euro. Hefty net short positions on the pound have been unwound since the start of the year as traders bet chances have receded a worst-case UK crash out of the European Union on March 29th without an agreement. EU Brexit negotiator Barnier said on Thursday there'll be no changes to the substance of the existing EU agreement with Britain's Prime Minister Theresa May, especially with the Irish border backstop. Elsewhere, global markets have been parsing the fourth quarter earnings season, the apparent lack of progress on Sino-U.S. trade talks, and the lengthening U.S. government shutdown. And that's one thing that I'm wondering is where we can go from here is that, and I was going to include that when I was doing the analysis on the cash dollar index. I just didn't want to go on that direction, just keep it straight technical. Was it at some point, where does this start to garner more steam? We've been waiting. The dollar keeps pulling out rabbits out of the hat, but I'm not thinking the dollar's going to fall apart, but maybe we're on that precipice to ease. But boy, the euro has really started on the back foot. U.S. benchmark indices has little changed overnight, and Asian bourses struggled for direction. First thing, Shanghai and Hong Kong stocks ended higher. And that reference to the Bank of Japan, we do note that. And let's go on and, like I said, we've gone over the opening bid. Let's just quickly move on to the ECB, which is the big story of the day. So this just kind of lay the land. Let's go on and move into the analysis. The European Central Bank is all but certain to keep policy unchanged on Thursday, but acknowledge a sharp slowdown in economic growth, raising the prospect of any further policy normalization being delayed. And that may be one of the reasons why we're seeing the bonds. Look at this thing, rip like crazy. Remember, wasn't even that long we were talking about here, with, we're seeing this here. We're talking about the 64.10-ish, and the market had gotten above it. Then we paired back some, and now we're just starting to just take off like a banshee. So let's go on and move back in here. But growth appears weaker than thought a few weeks ago, suggesting that this next move could be even be an easing of policy rather than a tightening. Germany, France, Italy, the Eurozone biggest economies barely grew in the fourth quarter. We'll keep on moving because some of that was covered in the morning bid. At most, Draghi could downgrade the bank's economic assessment, arguing that growth risks are now tilted to the downside. Boy, wouldn't that change a lot of things. He also provided clues about new loans to banks called long-term refinancing operations. Even if the balance of risk does not formally change, we would expect a sufficient shift in tone to signal the same thing, Deutsche Bank said in a note to clients. The problem with downgrading the risk assessment is that such a change in the bank's guidance would naturally raise expectations of policy action, but the ECB is not ready to tweak its stance, so any change in guidance would risk creating an impression the policy is not yet in sync. Draghi could also opt to stick with the bank's December formulation that growth risks are still broadly balanced. I don't see how that can happen. But you know what? I'm not going to go there. President Draghi will have to pull a balancing act, accounting the subdued cyclical trend in the Eurozone with accentuating the underlying confidence of monetary custodians in the economic outlook. Temporary, the problem is that a growth dip seen as temporary just a few months ago shows no sign of going away. Manufacturing contracted near the end of 2018. Export growth slowed and sentiment actions are falling towards multi-year low. A predicted rise in underlying inflation also failed to materialize, and employment growth is slowing. All this suggests that the Eurozone is now growing at or even below trend, so inflationary pressures may take longer to build, testing the credibility of the ECB and undershoots, and it says undershot, but which undershot its price growth target since early 2013. Some of the weakest may be temporary, like struggles of the German auto industry to adjust to the new emissions standard, investor caution ahead of the Brexit, the drag on sentiment from protests against French President Emmanuel Macron, but sluggish external demand is likely to be more persistent, with China's economic growth struggles likely to exacerbate the slowdown. If such a drag on growth persists, the ECB will be pressed to signal record low rates for even longer. It could also offer long-term loans on banks for more generous terms and may tweak its guidance on how long it plans to invest cash. Policymakers can afford to wait, taking more concrete steps home for growth to pick up in the coming month, and letting markets do its work for it now, shifting rate hike expectations as data disappoints. If, however, we move from a risk of a technical recession in some countries, our baseline to a protracted downturn with knock-on effects on the labor market and possibly financial stability, then the ECB would be forced to do something more drastic. We don't think the ECB is there, especially not in the midst of a succession debate for several board positions, which probably incentivized a lot of candidates to take a centrist stand. You know, actions, I stick by the credo my mom told me, actions speak louder than words. And look at the buns. We are just ripping away from that breakout area. Look, there's that breakout area, 6410, and look at these buns. They are just off and running. And things have slowed down quite a bit here in the Eurozone. We're going to go in and move on. Well, just one little test thing about the dollar slugged as hikes in mortgage rates out muscle. We don't spend any more time on the news. There was one reference here to the goal, but once again about the ECB. We'll quickly move on to the let's go and move on quickly to the analysis at this point. Well, we did go in and notate here, and I tried to, because it's the ECB, and I'm not talking about the event, that we could stretch the ranges out further, is why, I referenced that in the Asian analysis that we were looking at our bias chart support. Like as I mentioned here, downside support to come in at 1340, which is exactly where we just went. I mean, it just happened to be the range. That's it. So that we've been using that 1340, although the actual low the other day was 1336, but we've been using that as our bias chart support low. Looking here on the day, let's take a look here on the day chart. Probably going to have a few people kind of concerned at what they're going to do. Now, if you look here, it's funny I just brought up that day chart. It's because we have this trend line. And like I told you, I'm not the kind of person that uses too many trend lines, although I will sometimes on a 30-minute, only to see if I can see something breaking, but I feel more comfortable using the exponential moving averages with just the plain old levels. But there's no denying we broke past this. We've stayed, and actually, this is probably one of the reasons why people have gotten a little bit bullish on the euro. And here's that 1314 I was referencing with you. They've gotten a little bit bullish on the euro because we started out the week rather sickly, and you would have thought, okay, this points to a move pushing even further. Matter of fact, our analysis to start the week was looking for potential move, down here to 1291, which is a 78%. Well, let's go and see what happens with what Draghi comes out with. But one of the thoughts was, hey, we're holding our own. And Ivan had mentioned that in the analysis was that, hey, the euro is holding its own despite real poor economic data. But technically speaking, we need to crack above this trend line right here. And we're not even happening. And as I told you, the key area is going to be up in here in this 1460 area for us to push beyond that. So when we're looking at it, we've got 1340 here. The market still hasn't done what it needs to do to try and push higher. It looks like we're trying to work a little bit higher, but we've caught ourselves on the back foot. That story about the ECB though, that was since yesterday. So let's go on and take a look here on the 2 hour. See if we can nail down if we've got 1308. If for some reason Draghi comes out and offers something different, that's really going to flip things going the other direction. And I don't know that, you may be trying to see if this thing can push as far as it can push. For right now, we've got the 1308, but my thinking is we had held here on this last run at the beginning of the year. And one of the things that looked positive for the year, and one of the reasons why it advanced so strong also, was because we couldn't crack 1308. Okay, we couldn't crack 113. So if we were to work lower, that 1291 would be staring you big time in the face. 1340 is held, and we've been holding that, but you have to open that a little bit further in light of the ECB. What would be the downside? You don't want to be caught with your pants down. So we'll go with 1309 right here for support. But know that a dip below 113. If we'll just have to see what Draghi says here at this point. On the upside, well, initial resistance is 1416. This is where the rubber meets the road here. If the market turns around and starts taking off like crazy, it's 1460 where the rubber is going to meet the road. If we can push up, and 1452 is a 50% of this entire range. We'll actually go with this right there. So we're going to go right here, 1427 for the initial resistance from here. And it actually pushes up right there. You see that? We'll call it 1431. 1431. Okay, on the daily, we need to get it's going to be 1428 on the daily. So it'll be daily resistance on here. Daily close resistance. We'll just mark this as right here. Just put it like that. There we go. Let's go and move into the cable. One of the things we pointed out, I think it was on the, I know I did post it in the chart room, but it was resistance, I believe it was on the 2-hour, which was 30.52. Yeah, there it is. Well, 30, it's actually 30.53. So we're just hanging around here. That was a level here on the way up here. Let's take a look where we're at. Right there. We have pushed a little bit higher, even basically almost touched that 30.51. We're kind of holding here. We'll see where we go from there. But let's go and take a look where we stand here on the daily. Oh, you can see that's right there at 30.97. Right there. But the actual resistance on close resistance would be 31.23. Resistance is right there, 30.82. Support would be right there, 29.88, but I think we'd work a little bit low if we get beyond that. So it's going to be right there. 29.76 for support. Still a ways up, but we've come so far. Try to adjust season. Oh, here we go. Let's take a look here with the Aussie dollar. Well, one of the things we talked about at the beginning of the week, and actually I posted the analysis over the weekend, was this on the 2-hour chart, this rounding top. And we're starting to see this, pair back, continue to pair back here on the 2-hour chart. And I focus that because, it's not very often you see a rounding top. And to me, it looked like that and opened the door for us to move, lower and lower we have since then. Let's take a look where we stand here on this analysis. So we had downside support for 71.06, but it certainly looked like we pushed a little bit lower, but we were just keeping that in check. And but we've gone beyond that. Let's take a look as to where we can go to. I think we'd be a long ways away from a 38% because of this huge move. Support comes in right there. 70.55. Actually, at 70.73. I want to push this a little bit lower right there, coming across. At 70.66, 70.66 here. So if we do technically we're breaking lower. I think we push even lower than that. So we're going to go 70.66 for the downside support for the Aussie. When you think of how far we've come, it's not even just a little bit push considering the move we came from. 38% doesn't even come in until 70.48. Resistance on the upside, I think that's fairly clear right there, 71.42. Call it 71.42. Smart rebound back here in the Kiwi. We had resistance at 68.03. The high has been 68.06 and a half, with a low of 67.36. We did push beyond that. But you can see this coming across here, right there. We're going to go in and keep our resistance still in check. Hey, held overall. Look at that. We're only off by, 3.5 pips. Support on the downside, they'll look to try and defend this here. So support's going to come in. We'll actually push a little bit lower here. 67.46, about 20 pips away. Let's go move into the dollar CAD. We actually did some analysis, even though we had posted some analysis too in the Asian session on the dollar CAD. Move into that. It says the dollar CAD has taken a respite at today's bias chart resistance at 33.66, which is the 38% of the move from 31.80 to 36.65. Poor retail sales allowed the upside pop. Support comes in at today's bias chart support, which is 33.07. Let's go and move into the dollar CAD. There we go. You can see that 33.14. We know how important that 33.14 has been. On the way down, I was mentioning this as a, support level, and it barely even slowed it down. I'll say this, it slowed it down momentarily on the way down. And, I thought we would have bounced off of that, but all it did was slow it down. But it did, support now broken, became resistance, and resistance it was. I mean, we got up as high as I think it was 33.22 here before we went back to challenge this downside. Once we broke above this 33.14, the next target was 33.65, which was a 38%, and which what we had as our bias chart resistance, I think, for the last couple of days. There is 33.66. So we did make that trek up here. The poor retail sales is what allowed this thing to pop right back. And you can see here that resist support was, actually got as low as 33.05. We were looking for 33.07. But we're going to keep that in check here. It's going to still remain the same, 33.65 to 38%. We shall see how much further we can go beyond that. I think I was looking here on the 30-minute charts. Okay. See right there? There's also a little bit just below that. If we make that trek up in here around, well, it'd be there. So if you're, how much further, it could push higher, but I'm saying is if it just nudges up the next step to take out that 38%, keep your eyes focused on 33.88. We're actually going to use the 33.88. We'll actually put the 33.88 just so we'll know what the risk is. If you look right there, that's 33.86. Let's call it 33.87. 33.87. That's off that 30-minute chart. Might be able to get a little bit closer number as opposed to what we're seeing here in the 2-hour. Come to the 33.89. There we go. I call it 33.88. So we'll give it a little extra room on the upside. And we'll keep the 33.07 for the downside. So I think in this area here, the market can just meander around, push it on both sides, trying to figure out where it wants to go next. Sort of the momentum still in its favor. When we look at it here on the 30-minute chart, which is what I go with the exponential moving averages, it's still on a buy mode. Finally, the dollar Swissy just getting just a little tired. That's all it is. It's still holding up very, very well. Remember, I already know without even looking. Remember, it's 99.89, and remember we're looking for a move down here to 99.23. There he goes, 99.88, 99.23. No changes there. We'll take a look at where we stand here on the 2-hour chart. We have slipped even on a 2-hour basis into a sell mode, but that's going to remain the same, 99.89, with a pullback down to about 99.23, the dollar Swiss. No big changes there, and we'll move on to the dollar yen. Well, we did see this market back down. I mentioned this 1002 area here. We'll look at this when we're making that trek up here, and you can see this level. I mean, obviously that's a big fig, 110. Probably wouldn't say much to say 1002, but that's where I came up with it. But my take was, and I did post that in the chat room, was, look, we had such a phenomenal run up here. Now I know that in a sense what the BOJ was saying, basically in a sense flips the script. And we did make this run up in here, but my thought was, from a technical standpoint, is the market ready for the next leg up? And I thought, well, we'll probably have to digest some of these moves. And we did pull back. Not as much as I would have thought. I thought we might have even pulled back even further. I think I would have expected more of a move towards just 929, okay? And then the market says, you know what? Hey, the BOJ flipped the script. I got to be bullish. So we didn't pull back that much, although we did pull into a support area right in here, okay? You see there? Actually, the low was 939. Our bias chart support was 941. Not bad, because the other night, a day before, our bias chart support was 914, and that was the low, before we turned around and ran off like crazy to the upside. Well, it was 939, but I would have expected 941. The low was 939. I think you probably could have made more of a case for the dollar yen had it come down here, really actually to this low right there. You see that coming across? 925. It would have held its own, not far from the low, which is 14, and then the market would start taking off, and you'd say, wow, the door's open for them to even push even higher because they feel the BOJ has flipped the script. But I would have really seen this move pull back to digest some of these moves on a short-term basis. So we're still hanging around here. Resistance on the short-term basis is going to be 985. Support, we're going to go move this a little bit lower here if we do break. And we're going to say that 925. We'll work with 925. If we break this, it doesn't seem much to go by. If we break 39, just go 14 pips lower. Sorry about that. If we were to break lower, we would come down to 908. And remember how important 908 was on the way up, right here and in here. This was a tough one to tell. It really is. If you're short-term trading it, the support would probably come in right there, 925. But after taking out 939, it doesn't seem to make sense that they wouldn't push it even further. So we'll go back. Well, for right now, we'll just go with the 924. But this one's a tricky one to trade at this point. And let's move into the cash dollar index. Well, we're pushing higher here now in the cash dollar index, and this thing is, if you look at it from a daily basis, it's still, when you look at the momentum, it's still on the sell mode. You see that? We still haven't got past that. So, but we're definitely moving higher here. I think we'll go with which was our analysis, the Asian analysis, which is nothing's changed except at 9608. I do now have that as, we were calling it before, the intraday pivot, which it has been and has been key for a while. It was actually the upside we were looking at for when the market defended the 95.65. And it's remained a key level across the board and even on the way down. So this is where we're going to make the decision where we're going to go. But when I did the analysis, I said, looking at, okay, right here, there's some resistance right there. But that, no, we have to allow for, what we'll probably see some volatility. So it comes back up here, which I've got as 51. I think it shows here it's 52, called 51, 52, tomato. But 51, if we do break lower, then what would we be looking for? Well, you got that 95.65. I'm sure we'll see a bounce there, but where would we actually go to? My take is we'd go right down here before we see a bounce, 95.36, right there. So on the upside, it's going to be the 96.51, which we've had. We've had bias chart support 96.08. That's where the market held yesterday. It's actually the reason why, and I jumped out a little bit too early. One of the things I was looking at yesterday, remember the day before yesterday, we were looking for intraday support, a scalp support. We had a support at 96.08, but we were looking at 96.18. And we didn't get quite that. We made it to 96.22, I think it was, and we worked a little bit higher. And when we broke, I had been long euro, took off half, and then hung on. We still kind of moving around. As soon as we broke down to that 18, I should have known that, well, if you just break the 20, just like we're talking about the yen, which right here, if you break this, you're not going to stop there. You're going to work a little bit lower. So I jumped out of that euro long a little bit too quick. I mean, we moved up into the 90s. I jumped out, I think it was 79, as soon as it popped up. And probably should have given it a little bit more room. That being said, we've held here. Now look at the euro. We're at 13.48 now. Under some pressure, I think obviously they're thinking the ECB may have to be a little bit more forthcoming in what their situation is, which is really a very poor situation if you think about it. But looking on the upside, 52, 51, we're going to still keep the 51. Downside support, I guess for right now, we got to keep it this 96.08. I mean, I'm thinking if we break, I'm looking for a target down at 95.36. But until it happens, it hasn't happened. So everything's going to be the same, 96.08. The only difference is now that I've made that a bias pivot. And I think that's pretty clear why. Let's go move into the gold. Now, gold had been on a bit of a buy mode. It looked like we're finally, I mean, it actually generated that buy mode. If you look at it here on the 30-minute, had generated this buy mode early on. You can see right here after this pullback, and it stayed there. You can see how we dipped in here, we held, and we continued to move higher. And we talked about this 1286, but I thought if they're going to move higher, the dollar's going to pull back, we'd be looking for the 1289. Well, like I said, the rest is history. The dollar didn't pull back, and then gold succumbed to what has been the overall momentum. We pushed lower. So where are we at? Well, we had used 1277 before as our support. We shall see now with the dollar pushing higher. We'll see what happens with ECB day. There's 1275. Let's take a look here on the 2-hour. We'll go right there at 1276 for our bias chart support. But be conscious that we can see things really move around with the ECB a bit. And the upside resistance, right there, 1285. It's actually 84 3/4. We'll call it 1285. Still bullish, has a bullish band overall. Look at these buns, really holding up very, very well. Let's take a look at the bonds. $45.19, and that's going to remain the same for right now. $45.19 here on the bonds. Support we've had has been 44.26. And right there at 44.24. Yeah, the bonds aren't moving that much higher. I mean, obviously, it's a different situation, but I'm just saying is I would have thought you got maybe a bit of more of a sympathy rally in light of what the bonds are doing. Not very much of a sympathy rally at all. So we're going to move this down to 44.24. And let's go and move now to the aforementioned buns. I mean, this pretty much says it here. And, you know, about 3 years ago, you used to be able to trade the buns, the euro, based on how the buns move. It would always tell you where it was going to go. So you could almost, for a while, I used to, because I'm more towards short-term trading and scalping, I'd have a bun chart, intraday bun chart right next to the euro, and that basically, and you see the buns come into support and or come into resistance. You could buy the euro. I mean, it was just for a while, boy, that was really a good little play working with those two. But markets have gone on their own direction, although certainly the move higher in buns has resulted in a lower move here in euro. But if you think about it, I'm surprised the euro is even holding up as well as it is, because remember, 64.10, we're looking at it on a 30-minute. Let's get this thing back to a 2-hour, which is generally what we look at it. You know, we'd made this run above 64.10, then we fell back, then we got above 64.10. That looked like, okay, that was all a big pie in the sky. Now we're going to move lower. Some real big volatile moves here. So we come back and we're at 64.10 again yesterday, and look how we've turned around and jumped right back up. Not only jump back up, look, we've taken out the highs. I mean, we're just a little bit below that right now, but we are. But this, you know, is telling you something right here, you know. So you better, you know, keep paying some attention here on this one. You don't give it. I mean, it's one thing to be dancing back and forth around 64.10, okay, but it's a whole nother thing to show that we've broken out to new highs on this bun and holding up well. That really suggests something here, and I'm surprised the euro's not even lower at this point. Where would resistance be now? Let's take a look here. Well, resistance would be those highs, but we'll take a look a little bit, see if we can see something else here. Right there. Well, that's 64.58. The close here is 64.73. Yeah, 64.74. 64.74 would be the, if we were to push higher, it'd be a daily close. Support on a short-term basis is going to be right there, 64.36. If you're trading the euro, I suggest you keep an eye on this bun chart. That's probably not news to any European traders, but any U.S. traders, best you keep an eye on this bun chart. Let's go on to the DAX now. Wow, look at this DAX. Loving those lower rates, apparently. Resistance is right here, and it's above that. But we are above it, and at this point, if the ECB were to give more of a trying to think of the right word, but further acknowledgement, I don't know if you call it further acknowledgement, but recognize that we are running into some slow issues, we could see a rip here just from anybody that's short get knocked out of their positions. So we're going to have to allow for that. Let's go on and move this into a 30-minute, which we are in a 30-minute now. $11,166 for now. Let's just push it up here, just be on the 11,174. Support comes in right there at 11,089. This has got some juice behind it, so I don't think any dips back people will be happy to cover any pullbacks. So it's going to be 11,089. And here's a bias chart ahead of today's ECB. I hope people exited their longs. We have really tilted, and certainly the euro was in a situation where we were starting to see that divergence. But look, this is from a technical standpoint, no bueno. You know what I mean? So we put our bias chart support down here for, let's see, 1309. But if they get down there, let's go to the daily. That's what we'd be looking at. That's how we started out the week. And certainly when you look at this on the daily, when we broke this support level, and as I said, I'm not too much with trend lines, but I like to put them there if I'm seeing where I can see a change. And it certainly looked like we were going to be pressing to the downside at the beginning of the week and going further. And we actually were holding our own here. And so, and you can see here almost like a mini inverted hammer, then almost like a little hammer, and then the market got to going. But look, we're still below this trend. And now with this European economic data, now it's, I guess there's some concerns as to what Draghi may say. And until then, the market's going to be held hostage. And it might kind of flip the script here, there. You know, I'm looking here with the dollar index able to move lower, but now anybody that's long here is probably going to want to get the heck out of Dodge if we rally back. So time will tell, but you know, I felt a little bit of foolish jumping out of my euro long, the second half of my euro long so quickly yesterday, but I'm glad to have exited out. But we shall see here. But if we go down here, we've got 1309 on the 2-hour chart. But one of the reasons that we had such a great reaction here was because we couldn't crack that 113. Well, my guess is if we come down here, they're not going to be happy until they crack 113 to test those stops. But we'll see what happens. Good luck, and I'll get this posted in the room, and we'll see you in the chat room for ECB Day.